All right. We are about to get started, and I'll give everybody a few minutes to join the live. And we're gonna be doing. I'll wait till everybody gets in here. And then participants increase. Perfect, perfect. That's one. Got one more I'm waiting on. But today will be pretty insane live. Perfect. All right. So, um, can you see my screen and see MetaTrader 5 right here? We'll be going over a bullish example of confirmations to look for in the market. I do still use TradingView. I kind of like on the side. Like I usually will do my markups twice actually, but at the end of the day, because I'm kind of like making a transition from going away from TradingView and doing all of my analysis within my broker. The reason for that is you can't get any better than this in terms of execution, and it's the same thing with your prop firm. When you do all your analysis on MetaTrader, it's live execution. I mean, when you get your confirmation, you hit sell or buy, it's with your broker's data, like FXCM. Those are kind of vendors that give you the data on the candles. They might be a little bit delayed in terms of price action, and it might cause you to potentially miss trades and things like that. So that's why I would like, I'm switching to being able to do MetaTrader 5 and own MetaTrader 5 only. Because it's user friendly, it's intuitive, it's not all clunky, and you can actually see candles pretty far out if you zoom out. So today we'll be going over some multi-time frame analysis, and I was hoping to get a more energetic run up to at least take out this high right here, but I did not get that today. So it's Friday, so 50% volatility. Basically, if you don't trade London, then in the morning session, it's going to be very rare that you're going to get a full move, even going for two or 3%. Sometimes you can. I'm not saying that you can't, but Fridays typically are very slow days because the banks and they have half days basically. So the volatility is only for maybe the first half of the session, which is going from Thursday into Friday, which is that New York or London session. If you wake up early enough, you might be able to catch a small move for 2 or 3%. But typically, from what I've seen with current this year conditions of the market, Fridays are usually pretty slow, and Mondays sometimes too because they're just returning to the market after a weekend. So just an FYI, like I'm incorporating a rule where I'm not even going to be trading on Fridays because of that, unless I see something that's crazy. Mondays could potentially be like a market setup day where I'm watching how price moves according to where I think price is going to go, and then with maybe Tuesday more is more like a look for trades day, and then Friday is like a no trade day because of how slow it typically is. Um, so this is like just an example of how detailed your trading plan can get. I feel like everybody should take at least one day off a week from trading because you have to be able to refresh your mind and things like that. So just some advice for you guys so you don't just experience burnout. So that's 100 USD has some bullish predicted candles, but I also overall did see this bullish structure that took over after this major sell side liquidity take in this area. Obviously, they had to chase buy side, which was right here, and they continued bullish from there for quite some time. Drop it in the chat box if you can see that. I won't mark that up for the purpose of keeping my chart pretty clean so that you guys can see actually what I'm getting ready to show you. Perfect. So I zoomed in real quick, and I did notice that there was a recent break below or above my bad this swing high right here, and that's buy side liquidity take on the daily. That would count as a major swing high because obviously the daily is going to not going to break down into less candles. So let's just get around to like the H4. Obviously, that's going to be more candles on the H4 than the daily, right? So when you read in the daily, all of the structure breaks to the upside. The buy side liquidity take is going to be major swing highs, like right here, right here, right here on this candle right here as well. Everyone in the chat box if that makes sense. Each of these is a break structure up, break structure, and our buy side liquidity take. So remember what I told you about trading ranges and strong lows and all that. You guys have already learned that. You guys know that this major sell side liquidity take happened right here in this area. This is going to be a strong low, and then it's going to continue to break structure, creating those higher highs and higher lows. And each time structure is broken to the upside in a bullish trend, that establishes a new strong low. Drop one in the chat box if you get that. So your strong lows are confirmed until it actually takes that buy side liquidity. And same thing with strong highs. They're not confirmed until, oh my bad, it takes that takes that sell side, that big sell side liquidity, which let me put this down here actually, which is in this area, in this case, would be right here. So every time it breaks structure to the upside, strong low, new strong low right here in this area, breaks to the upside, new strong low in this area, potentially, right? Does not tell you that this is a strong low yet, but once this breaks to the upside, boom, and takes that liquidity, that's when it qualifies as a strong low. It's the same thing for when you're entering on a 15-minute. It doesn't matter. It's the same thing. So zooming in, and I just wanted to kind of go over that. So now I know for a fact at the time that I was looking at this, trying to kind of give you my thought process, this right here is going to be the strong low because this high right here had already been taken out. So in that energetic run up, to take that buy side liquidity right here, there was a fair value gap that was created, right? And then at the time that I looked, obviously today price was coming back into that. I did take an L on this today. That's fine. It still was a very valid trade. Price came back down and to about the 50% of that fair value gap. Drop one in the chat box if you can see that. Perfect. So I did draw my discount premium fib from the body of that candle to the high of the body of the candle, and this indeed was in premium or discount territory on the daily, and that's relative to this last structure break right here. So if you're doing a strong low, and you know this is the strong low, you're going to draw it from the strong low to the high bodies of the candles, premium discount. You can see that this is a premium, sold off back into a discount. The fair value gap is in a discount. Drop a one in the chat box if you see that and understand that. Now let me get rid of this real quick for the sake of the example, if I can. There it goes. All right, so moving on to the hourly. This is still NASDAQ. The hourly reflected that, right? Inside of that daily fair value gap here, I'm gonna put this back up top real quick just for a second. Inside of this daily fair value gap, right, you could have fine-tuned it down to this hourly fair value gap. Drop a one in the chat box if you see that. Zoom out just a little bit and take these off because they kind of make price stick. I want to be able to move around freely. You can see that there's an imbalance here on the hourly from this candle's high to this candle's lows. And I can zoom in just a bit more. And this is why I like MetaTrader, because you can do stuff like this. You can zoom in and you can still see a bunch of the trend. I like MetaTrader 5 specifically. So this candle's low right here of this candle, and this candle's high created that fair value gap. Okay, so for perspective, that is inside of the daily. So if you wanted to fine tune your fair value gap, I would fine tune it down to here, right? And this is also zooming out a little bit relative to this structure break right here, right? That's what happened on the H1. So it's the same thing here, structure break to the upside, but this is how it reflects on the hourly. Drop one in the chat box if you get that. Same daily fair value gap. This is just where you would have fine tuned it right here. And that's relative to this structure break right here in this area. So zooming into the hourly, this is that same daily candle inside, right? We're inside of this candle, but this is how that reflects on the hourly. So I knew that the daily fair value gap was going to be filled, right? It was in the process of being filled, and that there was going to be a continuation. And that since NASDAQ has bullish predicted candles and it's been bullish for some time, the high at one, if you look to the right here, the numbers 129, 12.8 was going to be taken out. Drop it in the chat box if you see that after the fair value gap fill, of course. So you're gonna have a fair value gap, and then probably the next couple of days you're gonna start to see some bullish candles coming up in order to actually get into that high. So that's how that reflects on hourly. Obviously, the daily coming into that made the hourly have some pretty good price action in reference to supporting the bias, right? So the context is that daily, fair value gap fair and continuation relative to the buy side liquidity, and then the hourly actually just had a recent major sell side structure break. After they take major sell side, what do they have to do? They have to chase major buy side. Drop a one in the chat box if you can see how that would be even more context. I marked that up because these were also relatively below. As you can see the wicks, pretty easy, right? So these are some things that I noticed about this trade idea, and I'm going to show you where I actually went wrong in terms of where I got stopped out and why I got stopped out, and then we're going to review what we should have done, right? And then the point of this lesson is going to be to show you how the daily, the hourly, and the 15-minute all reflect, right? So inside of that daily price or the hourly price action and coming from the daily, I did notice that price came down, rallied up really hard, almost took out this high, but didn't. So I was like, okay, bet this is enough price action to know that this daily slash hourly fair value gap, right, coming from the higher time frame context. Don't forget, right here, that was the whole premise of the trade, was that it was going to be reaching higher, and this is it fine tuned in, was going to end up continuing it up because obviously price came down, took that major sell side on the hourly, showing and that's just how the daily reflects down and started kind of plateauing, started kind of pushing towards this high, gravitating towards this high here. And this high is sitting at 409.3. Drop it in the chat box if you can see that. They started to kind of show that they're gravitating towards the high. So I said, bet. And then, and this is the 15-minute, right? This is that same H1 sell side take, major. Same one here, just for perspective. So you zoom in, and that's how I translate. This is usually how I do my markups. When I'm doing markup, I'll have my parent time frames up and then my entry time frame up. You can literally see live price action moving. And when price is moving, and you can see the daily fair value gap being filled, you can see the daily candle receding and rejecting, and then you can see that the 15-minute reflects really, really well off that. And I'll show you, if you do use MetaTrader, a life hack on how to have all your time frames up at the same time. So I initially saw this move right here, up, this energetic run up. I don't know why this morning I really didn't think about displacement higher and displacement lower. I thought that this run above this high right here, just kind of being tired, was going to support me a trade long. You had a fair value gap right here, plus an order block between this bullish engulfing. You had fair value gap between this candle's high and this candle's low. Drop one in the chat box if you can see that. You had I actually watched it respect and fill the fair value gap, and the candle closes after that are what made me want to get into the trade. Plus, it just took out some sell side liquidity right here, the swing low. Drop one in the chat box if you can see the swing low right here on this candle and the sell side liquidity that it took right here. Perfect. That's what my premises was on this trade, and it was a good thought process. It was, but I missed two key confirmations that I could have waited for, and it would have been a good trade. I would have probably been able to get like 1.5% from this, maybe, just with the low volatility today. What actually happened, and what I should have waited on, was displacement higher, as you can see here, right? That happened at 12385.1. That's where that kind of move stopped almost precisely and ended up at. And then you had a displacement lower here at 122.07.3. Drop one in the chat box if you see that. I try my best to label up everything so that everybody could see the premise of the 15-minute, right? And this is according to the daily fair value gap fill and continuation relative to the buy side. And then you fine tune that down to the hourly. And now you're inside of this hourly fair value gap being fine tuned down from the daily. And you can see the 15 minutes reflecting on the 15-minute compared to that daily and hourly price action, right? So what I should have done is wait for a displacement higher here, right above this high right here, displacement lower, sell side right here, right? Displacement higher, displacement lower. After that, price made an energetic run up, came up. I'll actually grab this. It made a really energetic run up, cleared this lower high, showing you that they are shifting the liquidity that they are actually shooting for. Drop a one in the chat box if you get that and see that. This is the only time in this entire trend that they actually traded above a lower high and took a buy side liquidity for it. That was when the trend shifted. Perfect. So the trend shifted there, right? You had displacement higher, displacement lower, bullish liquidity shift. Took some buy side there for the first time, signaling, right, that this is turning bullish now, right? The context that you have is the H1 fair value gap that you tuned in, and then the fact that this daily fair value gap was being filled and was going to be continued from. One more time, drop a one in the chat box if you get that. Perfect. So now that's what I should have waited on instead of getting in there. That's why I got tapped out. I got tapped out by this move down. You either going to read the liquidity correctly or you will be liquidity, and there's nothing else to it. So once you like I've been doing this for years now, and even I miss things sometimes. So don't ever feel bad when you miss a trade because it's perfectly normal, right? You're a human being. You're going to make mistakes. You're going to not see things sometimes. The important thing is going back in the chart, looking and letting the trade play out after you've lost on it, right? Don't chase the trade and seeing it play out and be like, okay, I should have waited for this, this, and that. And then notating that in some type of document. I don't care if you use Google Docs or whatever the case may be, and starting to put together a journal of the things that you commonly do that are mistakes. And then you start to use that journal. And if you have an actual trading journal, even better. But you don't necessarily need one. They have two automated ones that I do recommend. One's called Swift. I know the guy that runs the company and started it. And the other one is called Trade Keep. And they're automated and they give you feedback when you're trading and you have live stats and all that. It's insane. So all you gotta do is trade, and they put it in your trading plan, and they'll even let you know if you violated the rules. So you had a bullish liquidity shift right here in this area, showing that they were taking buy side. I also did see a fair value gap right here between this candle's high and this candle's low. I saw a price came in and filled that. Plus, they actually tapped the fair value gap. My bad, the order block down here. So you get a displacement higher, displacement lower, energetic run up, bullish liquidity shift inside of that daily fair value gap, daily/hourly fair value gap. And then you had an order block right here, which was this last bearish candle before the energetic run up that signaled the bullish liquidity shift. Drop it in the chat box if you get that. So at that point, right, price has gone from a discount to a premium, right? Remember when I showed you yesterday, if it trades above a short-term high, which is right here, price is in a premium. And then it has to come back into a discount in order to post a continuation. It actually did come back and tap this order block. I marked up the bodies because in this case, the bodies are more than the wick. Zooming in, you can see that price on this candle right here exactly tapped that perfectly to the pip and then rallied up. Drop it on the chat box if you can see that. So you could have, with all that context, felt pretty comfortable and been, I would say, 90% probable that this trade was going to work out with the limit order with an aggressive entry at the top of the order block. All right. Now that we've gotten all of that out of the way, I just wanted to explain my trade idea on the trade. We're going to look at multi-time frame analysis example. So I'm going to switch this real quick and straighten these out. And this is where we get into kind of like the meat and potatoes of the live. And this live is not going to be super long, but you can't do this in MetaTrader. You can't have three charts open at the same time, three different time frames of the same pair without paying for $30 a month for premium. They do have a $15 a month plan, but it only allows you to have two charts up, and you do need three. MetaTrader is a free alternative to that, and you can just have MetaTrader on your laptop. I do believe that if you're a professional trader and you're looking to be a professional trader, doing all your analysis and your executions in one place is going to be key. So let me straighten these out real quick, and we will get to the lesson. The rest of the lesson real quick after they orient these correctly so that you guys can actually see all of the time frames. Let me go back. That should be good enough. And then you got the hourly there, and you got the daily here. So typically when I'm executing a trade and I've done my analysis and I know my daily point of interest and where I think it's going to go, I have my hourly point of interest based on that. You know what I mean? I'll look inside of the daily. While I'm on the daily, I'll look inside the daily to the hourly to see what institutional footprint was that going to be, correlating with. And I looked and I did see that there was a fair value gap that obviously the daily would have been a good fine tune for. That was in discount territory. It was way down here. So I usually have the daily up, the hourly, and then my entry time frame, whether that be the 15-minute or 5-minute. And I'll zoom in like this, and I'll have all three time frames up, and price action will be running, and you can literally see price coming into the fair value gap, and then the daily just struggling to go any further than maybe like the 50% level of the fair value gap. While at the same time, the hourly is showing bullish confirmations, and you're watching the candles all run at the same time simultaneously. while at the same time, as a result of the daily moving, you can see that the hourly and the 15-minute, and you start to kind of get confirmations, right? And that gives you better executions, right? Because you can literally see the daily doing exactly what you said it was going to do, right? If you're correct on your POI, you can see the H1 moving, and you can see the 15-minute giving you confirmations at the same time, right? Imagine being able to have 3 time frames up at the same time, get your confirmations, and I can zoom in a little bit, and then be as zoomed in or not as you want to, and you can still move freely, right? These buttons right here, they shift to the end of chart automatically, so if you're ever going to just go straight to the right, but you can turn these off, and this kind of makes it kind of the chart sticky, not sticky in a way of like bad, but like you can move in and out like this, but it doesn't need to be like that. It's user friendly. You can move and get things how you want them to in order to kind of view how you want to. So in this case, with the for value gap order block combo, I would have saw price coming down after all of these 15-minute confirmations, and the daily struggling and the hourly going as well at the same time, and I would have been able to get why he is mad. I would have been able to get I would have been able to get a perfect entry, even if I would have saw sensitivity and like maybe I didn't want to do a limit order, right? Even if I would have saw some sensitivity to this order block or a reaction to this order block, given all these confirmations, I could have easily done a market execution anywhere on this candle. It doesn't always have to be right at the order block. Sometimes you get a rejection and you're looking for a reaction, and then you do a market execution, and then your stop loss is like just behind the displacement lower, right? That's a fair stop loss if you're market execution right here, maybe like just below this low. The reason why is because they just took recent sell side, and that's obviously a strong low. And then on top of that, right here, you had an intermediate term low right here, which is footprint number 2. And then you could have executed there as well using the power of 3. 1, 2, 3. Remember that the intermediate term low won't be broken. Strong low definitely won't be broken. And as you see, it wasn't. And you could have even waited on that confirmation right there. Could have waited on the second low to be formed. You have strong low, intermediate term low, and then you could have executed on the intermediate term low, because what happened? What would have happened? Open a 15-minute up again. What would have happened was it would have traded above this high right here. After the bullish liquidity shift, this is still a high that hadn't been taken out. Once you have that high taken out, that's a major swing high. You know that the last down candle before the energetic run up that took the swing high was going to be the new order block that they were going to use, which likely would have been this one right here. Drop one in the chat box if you can see that. It likely would have been this one right here. I can't speculate because the actual move didn't finish because of the day, but likely I would have 9 times out of 10 would have been this one that started the actual run up to take out this high right here. So at that point, you could have executed on the retest of the intermediate term low. That's also a confirmation. Drop one in the chat box if you get that and can see that. So using the power of 3 is important because you have 1 after displacement lower, right? That's going to be a strong low. Rise up, bullish liquidity shift, intermediate term lows created. That should mitigate your order block after the bullish liquidity shift. But if you do miss that one, you can execute on the intermediate term low because you know that this is your new strong low after this high is taken out, and still get a trade in. Can somebody give us Balo or something? And still get a trade in. Drop one in the chat box if you get that. So a lot of people get too caught up in this entry right here, and they don't ever pay attention to this entry right here. This is still a very clean entry, a very clean entry. Drop one in the chat box if you can see that. You could have executed on this order block, right? This is the intermediate term low, your first one, and you know there's going to be a second one coming because this just shows you that this is actually bullish because the strong low didn't get violated. Intermediate term low is respected. Continuation. If you missed that one, could have gotten in on this one. Very likely, if it would have taken out this high, I would have gotten in on this one, on the retest, because this is the one that started to break before the major buy side liquidity take right here. So you have so many options right here, at this order block right here. Could have gotten in right here, intermediate term low. Could have gotten in right here if this was the one that was responsible for taking this high out right here. You could go crazy. Or, right, once you get really good at this, you can get one entry, bullish liquidity shift, Scaling in, second entry after the intermediate term low is established, but you know that's not going to be broken, right? Second entry right here, this order block, right? Intermediate term low. In this case, the body was more, so you make another order block right here. Second entry right there, wrote it up. Boom, there's 60% right there. So this is a way of scaling precisely, right? Once your actual strong low, you got to get your displacement higher, your displacement lower, and you have your, if you choose to do this, which is fine if you don't. This is just something that makes it really easy, right, to focus on one pair at a time. You're locked into this pair, you get your entry, you close all your windows here if you want to, or everything except for your entry window, and you do the same thing for your second, whatever second trade you're looking at, and you repeat the process. I typically take 1 to 2 trades a day. I don't try to take any more than that because if you do 5% a week, that's 20% a month. That's only a few small trades if you're going for 1 to 3s, right? So that's an example of how you can see, and the point of this was so you can see how the daily, right, reflects on the hourly, which reflects on the 15-minute, and what type of confirmations come from such a small move. Like all this did was come down, fill the fair value gap, and then recede a little bit, and that caused all of this price action right here and all these confirmations. Drop one in the chat box if you can see that. Caused all these confirmations on the 15-minute, and you could have gotten in on the entry. And if the day would have been a full day, then this would have been a great trade for a long. Completely based off the daily. The only reason why you have the hourly up is so that you can see it trade below a short-term low, and you can see the price action on the hourly actually not being bearish and continuing up based on the daily. And then you just look at your 15-minute confirmations and compare and contrast, and then you'll know when to enter. So, like I said, you can have this on TradingView, and it's a bit better. I'm not gonna lie. You have a really big window right here, and it's like coordinated with your screen. Like the scale is it goes with the screen and everything, so it looks nice. It does look nice, but MetaTrader 5 has this for free. So, why pay for extra things that you don't need? If you want, it's a great tool, but I feel like if I'm not going to be executing my trades on TradingView, there's no point in doing it that way. So this is kind of like higher, like being able to see higher time frame stuff, and the fact that you only need confirmation that the daily is actually coming in, filling the fair value gap, and then you see some sensitivity. The candle receded. How did the hourly respond to that daily candle? Okay, boom, major sell side take. I know they have to buy off and take major buy side, which would be this high right here, these highs right here, these major highs right here. Hourly looks like it's getting ready to actually be bullish from here. Let me look at the 15-minute, because if the daily still is going to be continuing down and take out this low, you're going to see price continue to tank. You won't see this price action. You won't see the same price action on the 15-minute either. You're going to see the 15-minute continue to drop. So since you did see the sensitivity, and you saw how the hourly reflected, you saw how the 15-minute reflected with the confirmations coming, it should be a no-brainer trade, right? It should be a no-brainer trade. Drop one in the chat box if you get that. If the evidence is there, execute the trade. If you lose on the trade, go look, see what you did wrong. Because normally when people lose on trades with this system, just to let you know, and as you can see, I did take an L here earlier, it's user error. You could win 15 trades in a row with this system and then finally lose one because you missed one thing. As you can see here, took a long, got stopped out by this big move down. That's fine. But it doesn't take, I didn't wait for my displacement lower. That was my problem. I got my displacement higher, but if I would have waited for my displacement lower, I could have probably caught a little something here, maybe like 1% gain or something like that. But I would have liked to got in and taken this. Maybe got in the morning and tried to take this because this is a volatile pair to this high. Big move, or to this high. Stops at break even, partials taken at this high, or any of these highs. Didn't really matter which one, but I personally, if it just took major sell side, it's going to have a very energetic run to major buy side. So I'll typically target this. And if I can't, if the day progresses and I'm, going for 7%, 8% with sniper entry, then I'll just close the trade and profit deep. You lose nothing by being in profit. So what if you're targeting, you're reached? So that's just an example of an option you can use It does take some getting used to kind of operating MetaTrader. It's not too different. You have a lot of time frames that you can use and go down time frames and things like that. And you have a lot of things at your disposal. The reason why I used NAS 100 USD is because this is one of my favorite pairs. Actually, it actually respects these concepts the most out of any pair or asset class ever. As you can see here, it respected them pretty nicely. And you could have even gotten a second entry right here. You could have even gotten a second entry right here. So next week, as long as fundamentals are in line, I'm gonna be looking to capitalize somewhere on this trend here, as long as it's still bullish at least. So that's an example of higher time frame to lower time frame correlation, right? This is an example of a great way to trade so that you can be just locked into one pair at a time when you are entering. Because when you're doing your analysis, right, you're done your analysis for your pairs. You have where you think they're going to be going and from where, and you have what you expect to happen. You can only enter one of those pairs at a time. You can only realistically focus on one pair at a time. I feel like being zoned into one pair and going for 3 or 4%, and then maybe getting a chance to get into a second pair before the day's over is much better than having your brain jumping from here to there. That's too many thought processes at the same time. You're gonna be confused. You're gonna forget something, and that's oftentimes, honestly, how traders lose on trades. They'll be in a good thought process with the trade, and then they'll be like, "Oh, I wonder what's happening with that other trade," and they'll switch pairs. And this one might be a long, and the other one might be a short. That your brain. I'm not saying that you're not smart enough to multitask. I'm saying that the human brain, with today's age of people, have short attention spans. So if you can be like, I am buying NAS 100 USD, and you can be zoned in like this during the session, and you're just sitting here waiting for confirmations and looking at the daily, also reject, looking at the 15-minute reflect from there. Based on that, looking at the hourly being bullish. Once you have confirmations on your entry time frame, you know what it's based off of, and you can see the things happening on your higher time frames. Parents lead. These two guys, hourly 1 hour, parents lead, kids follow. That's how you should think of this. Parent, they lead, kids follow. And you want to enter on your entry time frame the second you have confirmations, right? This makes it significantly easier to be more accurate, right? Because during a session, you're in this pair the entire time. And once you have an entry on that pair, it's already done. You've done your analysis, you enter the trade, your stop loss, and your take profits in place. Now you can move on to another pair and start to look at the similar thing. Same style. Doesn't matter if you're bullish or bearish. Daily, H1, and 15-minute time frame up with confirmations and your POIs on your each individual time frame that you'd be looking for. And then you just compare and contrast. Makes it really easy to be more precise. So the whole, like I said, the whole point of this lesson, it wasn't more of a lesson. It was more to, the lesson was to show you guys how a method that to use in order to get better entries, better executions, and just trust the system more. You'll be able to see things happening and execute on those things as your other things are moving at the same time. It's actually really powerful. You guys get to see stuff like this. It does, like I said, take some getting used to. But like I said, once all your markups are marked up, that's it. All you have to do is sit there and execute. So the whole time I'm looking at my entry time frame, you know what I mean? And you can have the new order button up and have it floating up here and minimized, and then use it when you need to. It makes it so much simpler, and it gives you a lot of insight on how the parent time frames reflect on the lower time frames. And it's really important because the 15 minutes not doing anything without the daily being done with what it needs to do. You know what I mean? The 15-minute will not be going up any sooner than the daily is ready to start going up and showing bullish. Drop them in the chat box if that makes sense. You're not going to get your 15-minute confirmations or your hourly displacement lower, or your hourly low traded below until the daily pushes down enough for that to reflect on the hourly. And you're not going to get your 15-minute confirmations until the daily recedes like it did in order to print all this price action, and your hourly, does the price action that it does. You're not going to get that. This is the parent time frame, the biggest parent time frame. This is the guy's second place right here, and this guy is the child. So you're gonna wait till the child follows the parent, and then execute on the trade when it happens. One more time, drop it in the chat box if that makes sense. So this is kind of like how my charts look when I am getting ready to execute a trade. Like I said, it's more of to show you how to use the daily down to the 15-minute, or you can even, it's the same thing. If you want to be entering the 5-minute, just the same thing, but just drops down to the 5-minute. And you can wait for confirmations, and you can see that same thing. The high was more defined, traded above a major swing high, came back down, retest. This is that 15-minute order block right here. Retested it perfectly. Fair value gap fail as well. We're on a 15-minute. This is an order block fair value gap combo. And as you know, a part of the rules for choosing your order blocks is that your order block has to be coupled with a fair value gap, right? It has to be. Those are going to be those high probability order blocks that you're going to use for entry. And you can see right here, you got an order block plus fair value gap between this candle's high and this candle's low. Drop one in the chat box if you can see that. So now you have displacement higher, displacement or lower, plus order block fair value gap combo, highest probability order blocks. When you see those ones print, those are the ones that the algo is going to be using to actually push price lower and higher. Same thing with bearish. Displacement lower, displacement higher, order block, or whichever one comes first. Sometimes it'll be displacement lower, and then you'll have displacement higher. And sometimes you'll get displacement higher first, and then get displacement lower after that. Doesn't matter what the order is. Bearish order block fair value gap. If fair value gap is not present, you don't have a trade, because likely that order block that you're choosing is going to be chosen as liquidity, and you don't want to enter there. You have to have that fair value gap coupled with the actual order block, and it has to shift liquidity as such, right? You have to have these confirmations in order to get qualified to be able to do like a limit order, because it's showing you bullish right here, and then you limit order, and it's high probability. Saving the end for questions. Do you guys have any questions when it comes to this and how the daily time frame works, going all the way down to the hourly, or down to the 15-minute and or 5-minute? So displacement happens for buys and sells, but it doesn't matter what order they happen in. So if you're looking for a sell and the displacement lower happens first, expect a displacement higher after that, and then you can start to look. Typically a displacement high. Oh, I see what you're saying. Okay, never mind. I misunderstood the question. So yeah, when it comes to sales, I would say about 99.9% of the time, a displacement higher happens and then a displacement lower, and that's when you kind of look at your fair value gap, things like that, in order to get into the trade. And now I say about 99% of the time, a displacement lower for yeah, it is an order like you're thinking, but there's like a 1% of the time where it'll be an out of order that I've seen about 1% of the time, and when you do have that, I would wait for extra confirmation, because that might be used as liquidity that would have bought that you're choosing. It might be a manipulation displacement. Yeah, so it does have to be in that order, and just kind of be aware of that. If you obviously if he comes back up and you get rejections and all those things, and your strong highs respected, that's an easy execution. But if it even pushes up to that strong high or strong low very energetically, likely going to be liquidity, and I would just demand more price action at that point. When in doubt, demand more candles, demand more price action, demand more liquidity going in your favor to be taken. Let the market tip its hand to you even more if you're not sure. You guys have any more questions about this? So this is typically what my charts look like when I am executing. Yes, I will. That's actually in the next video, which will be it could be either Saturday night, or I could do one Sunday if you guys want to. If you guys want to go to the DR one real quick. That one couples perfectly with this. Okay, this weekend after Saturday sundown, let me know when you guys are available, and we'll go over the DR one, and then we can get an early start on the week. But yeah, that does couple perfectly with this. Okay, guys, I'm gonna upload this, and then I'll see you guys in the next live. Yeah, no problem. See you guys later.